I get a chance to talk with a lot of cool people. And then I just find myself sort of like reiterating the conversation or the interaction or whatever it may have been. And a lot of the people I interact with, especially with people online, especially like the Expector guys or the Casino Coin guys, or even like yourself, or even like Edward, I talk with them in the space, and they're like very visible in the space, but I don't get a chance to capture all of our conversations. I don't get a chance to capture all of our conversations in a way to where people get to see it like authentically. It's cool to be able to talk about things that are going on, but it's another way to be able to see it. So I figured I started live. Then it's funny too, because my friend's like, "Oh, dude, you should just live stream." Like, and the reason I did this too is I hated editing. Like, I love the content creation process of like going through and making a video and talking about the things I like to talk about. But I find the editing process quite grueling sometimes. So my friend's like, "Oh, you should live stream. You should live stream." So yeah. So we're gonna try this out. It's been pretty cool.
Weekends and we have in the Discord and stuff. So I mean, Zach doesn't.
Say that again real quick. Your audio. Say that again real quick. Your audio was being a little weird.
I was just saying we've been tossing back and forth, doing a live stream on like Wednesday nights to capture a different audience, that's not on Twitter or, when we can live stream to like a bunch of different platforms at once. So we got software we're going to use. Streamlabs.
Oh, I've heard of Streamlabs. And isn't that good for like multi-streaming too? Like I saw people do that with Twitter or X, I guess you could say now. Yeah, that was something I was thinking about. That you guys were thinking about. What type of show were you guys thinking about if you guys did it weekly?
Just same thing I do on Twitter, really. Like get on there and just kind of rehash what's going on, where the space is headed, talk about, the stuff that I deal with. Maybe it's an instance that I have with a client during the week. Circumstances come up, a new product we're offering, different stuff like that. Just to keep it, like again, another touch point for people. I think if you do that on a regular basis, you stay relevant in the space, and it gives people access to you. So,
yeah,
I think it's a good way to go about it, man. And you got enough clout and access, like you could have whoever you wanted on, I would guess,
I wanted to say, looks like everything's working well. We are live. I wanted to give you sort of a proper introduction. So, how's everyone doing? It's your bro Quincy. I'm here today with Jake Claver, and we're going to be talking about the future of crypto and finance. Jake, can you give everyone a little bit of a intro on yourself, what you're all about, and the things that you do?
Yeah, absolutely. Appreciate you having me, and glad to be here. So, Jake Claver, like you said, I'm director of Digital Ascension Group. We are a family office service provider that specializes in digital assets. So we have a full scope of professionals across all the verticals in the family office, whether that's a CPA, accountant, wealth manager, financial advisor. We have a custody service with PolySign, funds and foundations, philanthropic stuff. And then we have a full suite of concierge service, private security, all those other things as well. We also have a mastermind group where we go over business resources and financial education. And we run some private investment deals through there that allow people access to investments that they otherwise wouldn't have access to, which is cool. So kind of a high level of what I do.
No, I love that. I love that because you're one of the few in the space I get to talk to that has a bit of a background in the traditional finance space. And when people talk about crypto and adoption and what that means, people talk about it, but not many people sort of, well, one, deal with it on a daily basis in the traditional realm, but also dabble in it in terms of just understanding how crypto works and understanding different aspects, whether it's tokenization, whether it's trading, whatever it may be. So I find you a very interesting, sort of interesting character to be able to speak to because I feel like you have an interesting perspective as well as an interesting domain of competency that goes really well.
Appreciate that, man. Yeah, we have a couple other projects. So one of the things we're working on is tokenization of the private investments themselves and creating liquidity in secondary markets. And then also involved with Brash Labs. I don't know if you're familiar with Fredo or not. and his project.
Yeah, can you touch, or are you allowed to touch on that a little bit? I've sort of heard of it in passing, but yeah, elaborate a little bit.
Yeah, it's built on the side chain on the XRPL, the hooks side chain, using Zahao, and kind of a piece together with Evernode and some of the other things he's involved with. But it is basically applying NFTs to real world items. We have a proprietary RFID tag that has 3 layers of access and different information on each one of those layers that resides on the blockchain and attaches that physical item to the NFT that's been issued on that side chain. So you can have smart contracts. First vertical we're going after is maintenance on exotic cars. And then, taking that across other things like high-end items versus bags, watches, guitars, stuff like that.
See, that's really interesting in terms of, especially when you talk about being able to utilize NFTs for especially real world use cases, and especially being able to manage like maintenance schedules, and I presume it's about like managing the specific like items that need to be maintained and like time stamping and dates and all that. See, that's like a really interesting idea, because when people talk about NFTs, they get all hype into the speculative component, but they forget that it is a unit of account on the blockchain. And then that unit of account can be used for a multitude of different ways. Something as simple as, well, keeping track of specific maintenance schedules for cars and the different parts that may consist of them. And there's probably a bunch of different types of NFTs. There may be a type of NFT for the car, NFT for the part, or different, whatever it may be. But it just shows you that there's a lot of things happening, and they're not as hype and as hoopla. I mean, don't get me wrong. Everything all together, once you finally see the exotic cars and you finally see all the everything coming together is pretty nice. But, it's not all hype and games when you when you look at the NFT use case, but the ability to be able to create new products is really what should be exciting. So that's what gets me excited when I hear stuff like that.
It's just efficiencies for the system that already exists, right? I mean, people aggregate data. It's just difficult to access it. And how is that transferable to somebody else? Easily readable. You need security and governance around how it's accessed. And so with the smart contracts and the NFT that's been issued against the item, you can code all that in. Right?
Exactly.
So as a manufacturer, I think it's a huge value add for warranties, for maintenance, for insurance, logging anybody's interaction with that physical item for whatever reason. And then, as an owner, like, and I think I've told you this before, but when I tell somebody of like what I think an NFT, like, there's a lot of applications. You got fractionalization and community and some other things, access, but like the provenance of that item, I think is one of the integral pieces to an NFT. So like I always give the example of Pawn Stars. Somebody walks in, they've got a guitar that's slash played, that they say slash played, right? And they've got a picture of Slash with that Gibson that they show Rick. And they're like, Slash played this, I want $100,000 for it. And Rick's like, okay, well, show me the paperwork. And they don't have it. They just have the picture. And he's like, all right, well, there's 10,000 of that Gibson. I can give you what the Gibson's worth, but I can't give you what it would be worth if we had some way to prove that Slash played it. Well, if there was an NFT issued against that guitar, then you would have the digital identifier that showed that Slash at one point owned it. And then you could prove it very easily, right?
Exactly. And it's funny that because it's really simple. It is like a unique identifier. Really no different to like how like a VIN number may be or anything like that. The main thing is, with it being on chain, anybody can now reference that identity, as opposed to it being in some central database that you would have to go to find out and reference. And with that, that means anybody can now check to see if this particular item belongs to who it says they belong to. And you can do this with a whole assortment of different items as well. So I think that's like the really interesting part, is all the different things that you can essentially track, and then all the different applications that can utilize those tracking mechanisms, whether it's supply chain, whether it's maintenance schedule, notification and updates, whether it's insert whatever thing you could essentially imagine. This shared accounting allows for people to be able to reference the same data, and then they can essentially act accordingly.
Yeah. I think it'll change commerce. XTC is kind of at the center of that with trade finance, right? Um, After listening to Andre Casterman at the event in Austin this year, what they've developed on chain, and like if they've created ISO standards for the messaging across bills of lading and all of the other documentation around, transferring goods around the world, and now they're able to have a settlement layer on top of that, and create smart contracts for the transfer of material and tokenize it. Like, blown away by what you guys are developing over there. And TradeFi, I think, was the name of his company. But that's just one of the many brilliant applications that are being built out on XDC's network. Yeah, I know you're working on some cool stuff. Do you have anything that you can share with me?
Going into the new year, I guess you could say things are sort of jumbled up a little bit. So anything I can share? I just did like a news, sort of release, not even a release, but like a milestone update, like not even that long ago. So everything that there really was to share was in the milestone update. Yeah, I think the biggest things that I find most interesting in that regard, because I'm trying to think, I'm like, what would be new? But the thing I find most interesting in that regard is the trade trust and the tokenization of documents, sort of what you were stating with NFTs. Being able to reference documents and being able to verify documents in the form of tokens on chain is a huge thing. And Trade Trust is an organization that's doing that. And there are other third-party applications that are utilizing their smart contracts to tokenize and verify documents. So this is the thing that I think is really interesting, is not only do you see people building on chain, but you see people utilizing services and smart contracts that are built. And that's essentially what's happening with documents and verification and IDs and all that. And it's not sexy. Sort of what I was saying before with NFTs. People talk, oh, NFTs. Oh, like I remember talking to somebody and he was like an NFT professional because he made like 20 grand in NFTs. And it's like side buying and whatever. But I'm like, well, when you see how people are able to use these tokens as, and really a lot of it is just identification, verification, and then referencing a bunch of information and then maintaining the integrity of that information. So like if this needs to be here on a specific date, the biggest thing is like immutability, and people talk about like it being on chain, it's immutable. Well, you being able to verify something and then knowing that that data is immutable allows you to be able to do a lot with a lot of people being able to reference it. So yeah, trade trust and just the applications that are utilizing trade trust. I know Digital Transformation Group is like a startup that's utilizing trade trust, and they're focusing on identity shipment or documents in terms of shipments and verification. But yeah, seeing how these apps can utilize each other is the cool thing that I think is happening.
There's going to be so much stuff that changes over the next decade with the implementation of this across multiple sectors of the economy. And that's going to be the cool part to watch, right? And the average person isn't going to even know it's happening. They're just going to think there's a software update and stuff works better.
Yeah.
Exactly. Cool. I can access this information and it happens easily. Like most people won't even know that it's blockchain or smart contracts that has changed things. They'll just have an app on their phone and it'll work faster and better and allow them access to data that they didn't have before.
I think a perfect example of this, especially when we talk like finances and payments, is like just payments happening overnight or payments happening instantly. This could be an example of certain aspects of blockchain technology being utilized on the back end. But this doesn't necessarily mean that people are interacting with it directly. This could be in some regards, but in most regards, you may see some sort of interface or some sort of product put in place that allows you to interact with all the different blockchain services. And the user would just have a seamless user experience like they would with most other applications. They just now are able to get all these new features. I sort of make it like analogous to when we sort of went into the cloud internet. Before cloud, different organizations would have to host their own infrastructure and their own servers, and only really, really big companies and big corporations can afford to do this at scale. But then with cloud, you could have a micro startup create a streaming company that can stream from 1 person to 1 million person, almost 1 million people, almost instantly, and that would have almost been impossible for the on-prem internet as opposed to the cloud internet. And I think you're going to see the same thing when it comes to payments, DeFi, finance, and settlements with crypto, where you see all these different services that weren't necessarily capable before, but it's almost invisible how they were able to be integrated because of how passively we use them. Like when it comes to cloud, everything is cloud. When you look at streaming, like how we are now, when you look at on-demand videos, when you look at gaming, when you look at literally like 60 or 70% of the entire internet services, they're all hosted in cloud. And these allow for a bunch of services that wouldn't have been possible. And we sort of remember that in some regard, but it becomes so invisible and so utilized that you don't even think about it. And I think a lot of that's going to happen with blockchain.
Yeah, I would agree. I think that you touched on one thing interesting there that I want to go back to. I had a conversation the other day that kind of analogous. There was a guy that has created a proprietary streaming protocol that's real time, so there's no latency, and he uses it in an application for people that do specific types of surgeries to teach surgeons all over the nation or all over the world how to perform that surgery. Right. So this stuff just allows things to be significantly more scalable than they were before. Micropayments will be another application. I don't know if you remember Coil or not, but like your ability. So that was on the XRPL, and you could send micropayments for like the amount of time that you spent on a website.
Oh, I've heard that. Yeah, I've heard that.
You would send like 0.0001 XRP for every 3 seconds or something you're on a website. But I think that, once that's a capability, the other thing I think about payments is like in reference to the post office and email. Okay. So think about how much volume the post office used to do in comparison to today. And I'm sure they still have a decent amount of volume, but not anywhere near as much as when people communicated by letter.
Yeah.
And then we got email, right? And when it first happened, people were like, what is this email thing? Nobody's going to use that. And now, I don't know how many emails I get a day, hundreds, because the friction to be able to send a message to somebody else instantly there's not. It's easy and it's free. And I'm sure the volume of communication that happens today is 20, 50, 100 times more than what it was when we were sending letters. And so that's kind of how I see payments progressing also, is there's a lot of friction. I say a lot of friction. They made it fairly easy to send a payment, but there's still friction there, right? So when you remove that, how many more payments are going to be sent between people? And I think that's where these payment companies are going to make it up on the backside by utilizing this technology. They might be able to lower their fees, but they increase their margins substantially, and the volume of payments that's going to move through their infrastructure is going to be 10, 20, 50 times what it is today. And so by proxy, if their margins increased, even though they're making less on each individual transaction, they'll actually become more profitable using blockchain for facilitating payments.
See, I think a good way to look at it, it's so interesting how you phrased it earlier. A good way to look at it, especially in terms of like removing friction, is imagine, and you don't even really have to imagine, but there was a time where the majority of our economies dealt in cash, like hand cash, or at the very least, like written contracts, like paper contracts. And then things became a little bit digital with, computers and such. But really, they were just managing the accounting of the paper accounting that they had for each individual organization, but they're using computers to do so. To be able to exchange with each other, yeah, it was a little bit more frictionless because they can do more computing faster, so it can do the accounting faster, the math faster, calculating. But there still was a friction in terms of how people were able to participate. So we went from, just cash, paper accounting to digital accounting. And I think now with blockchain accounting, the elements of friction that gets removed is the parties being able to engage with each other. Because because people go, digital, assets, digital currency, what's the difference between digital now? And well, digital now, these systems are segregated, actually. That's the big difference.
Sure.
You have company A, B, C, D, all the organizations, all the brokers, all the banks, they're all segregated, and their means of being able to engage with each other is entirely predicated on their relationship with those other organizations. So the bigger the organization with more relationships, the more trade that they can engage in, or the more business that they can engage in. Where here on the blockchain, these services can run autonomously as smart contracts, and these assets can be traded amongst anybody who has access to the blockchain. So anybody that has access to the internet now can have access to all those different trade participants, not just based off the organization's ability to acquire trade partners through a physical relationship.
Well, you can get immutability and trust too, right? And auditability of counterparties. You still only want people to see however much they need to see. And that's the other beautiful part about the smart contracts and this technology is, so like we deal with identity for KYC, KYB, and accreditation. And you have to put in certain information for that. And to be able to participate in certain markets or with somebody new, when you share a hash with them, we use a provider that creates an NFT against that information. And you only have to share as much as you need to with that other party. They don't, like, let's say you wanted to share your driver's license, right? Because somebody needed to know your name and date of birth. But you didn't want to give them your driver's license number, your height, your weight, your eyes, like all the other information that's been, listed on that document. Well, they require the full driver's license, so you don't get an option. You're just going to have to share all of that data, even if you don't want to. But with this technology, you get to like piece that out, right? How much do they need? I only have to share what I have to share. So that's the other piece here that I think removes some friction for people. Is there are certain people that don't participate in transactions because they don't want to share certain data with counterparties. But with this, you don't have to. You only share what you need to when you need to share it. And that can also have timeframes on it, programmatically. So if they only need that data for, like, let's say there's NFTs issued against cards in a hotel, right, to unlock the door, or you send the NFT to their phone to be able to unlock the door of the hotel. They only have that access for whatever period of time that's programmed in. And it would be the same way for access to other data in my mind, which would be nice, unless, there's certain fiduciary controls that require you to keep data that if you dealt with somebody, you've got to keep it on file for a certain period of time. But I think maybe there's a way that you only have to request access to that data. So then you don't even have to store it. You can just pull it whenever you need it for an audit or something, which would be nice.
Yeah, a perfect example, like people talk a lot about this in crypto, and it's like knowledge proofs and like zero knowledge proofs, and being able to verify information without having to compromise that information and share when verifying it or having to share that information. And this is sort of like a broad concept, but it goes into a bunch of different ways of being able to verify data without having to release it. There's like a few like classic examples for this. Here's an example to sort of show a knowledge proof. Let's say I had a deck of cards and I told you choose a card, and I wanted you to prove to me, or I just wanted to prove that card is, let's say, black or red or something, right? But you don't want to give up the face of the card or the number, right? But I want to prove it's black or red. Well, a perfect example of like a simple proof could be, I could take the deck and I can remove all of one color of the card. So let's say I removed all the black cards. I can see that I have all the black cards. I can verify that that's a red card because I have, the entire collection of black cards, even though, and it's a little simple example, but these things become progressively more complex in terms of trying to verify things without trying to compromise that info. And that's the thing. There's a lot of different ways and a lot of different techniques to do that. And I think people find blockchain interesting in doing so because, yes, it's public, but being able to use these proofs can be a way for being able to verify information without having to place that information publicly. So, and it's just things like that I think is really what's going to create an atmosphere for people being able to utilize blockchain in a way where you can't utilize current technologies. Because right now, if you wanted to engage with a party, it's sort of like, do I want to send my information to them? Are they trustworthy in handling it? If their databases were to be compromised, to what degree would my information be compromised? All these things are a concern every time you engage with somebody, as well as like the data in transit and their methods of managing it. All of these things can be resolved. This is sort of what you stated before, the friction, by being able to use these different methods of verification on chain.
Yeah, my first experience with zero knowledge proof was actually Global ID. I don't know if you ever used that app. Actually,
I've heard about it. I've heard about it a bit, and I've seen some apps that actually took global ID, so I thought that was cool.
Well, yeah. So they're starting to expand. I think that they'll probably be one of the prominent ID solutions. I don't know how long it'll take for them. I got to speak with their executive team not too long ago. I like the path that they're on. They've become multi-chain and basically agnostic, where they'll work with any chain. It doesn't matter. What originally I think they were kind of, pushing the XRPL. I think that they've gone a better route now, because there's going to be a lot of chains in the future that NFTs are issued on, smart contracts are issued on, people are transacting with, and you're going to need an identity that's across all those and interoperable. But what they do is they work with third-party verifiers, and they'll verify the same information multiple times with those third-party verifiers. So let's say you've got firm A, B, and C, and they all verify your identity on your driver's license or your passport or your social media. Okay. So maybe you could leak it for one of them, but they are third-party verifiers, and it's auditable, and they keep that information. And so if you shared it with 3 different people and they all verified that what you provided was correct, you are you, then, when you're transacting with somebody else, they want to know if you are you, and you say, well, here, all of these 26 other people all verified that this is me. And they're like, oh, okay, well, then I guess you're you, or whatever information they're verifying. Then you don't even have to present it to them because it's been verified by somebody else.
Exactly. Like that delegated trust could be huge, because now that let's say I trust Bill, Sally, and Mo, right? And these could be different organizations to verify my identity. I could have those different lines, those different engagements with them, verify my information, and as long as they're trustworthy parties, other people can use that verification to engage in whatever. And those parties could be whether government parties, bank, or financial organizations. It doesn't really matter as long as they're trustworthy. That could allow a means for people to be able to exchange on chain without necessarily having to go through and check, one, having to volunteer that information, but also check the validation. Because now, instead of you having to check the verification and check that ID is valid, you're trusting that organization, and presumably you would probably be utilizing that organization as well to check yourself. But you can have that organization be the one to check it, so each person doesn't have to keep checking each other. And we can just keep it to a handful of organizations that are trustworthy, rather than everyone constantly checking to see if everyone's constantly being honest. So at the very least, yeah.
Yeah. Like you said, friction. Was there anything else you wanted to get into? I know you sent me a bunch of different topics.
Yeah, one thing that I actually didn't even anticipate the first few topic points, but I love it. One thing I want to talk to you about, especially with people getting super excited about the hype in the markets and stuff, wealth management strategies because people talk about, investing in crypto, investing in that, but people don't talk about wealth management once they finally had even any amount of money. And I find myself in the exact same position, just as anybody else. I find myself constantly in crypto and constantly, if you want to say it, investing or whatever. But then what do you do when you're like, oh, well, if I have a little bit of anything, should I get into property? And not even just get into that, but what is an outlook to look forward to beyond crypto when you're looking into just wealth in general or wealth management? And I don't say that to ask for getting financial advice. I say that just to get a perspective beyond the crypto speculation, because everyone goes, oh, once you get into one crypto, you get another crypto. And then I'm like, well, I know that there's finance tools and stuff, and I know that there's property and whatever bonds. But the thing is because I'm so sucked into crypto, first thing I think of is more crypto,
You're not alone, and that's most people, right? It's a very broad question, so I'll try to compartmentalize it and break it down. I try to work backwards from things, right? So if you're using crypto as an investment vehicle, what are you wanting on the other side of it? Why are you making that investment? Ask yourself that reason. And the analogy I give people for this, and most people, and I did for a long time, so I'm not like boo-hooing anyone. It's like a dog chasing a car. Okay. What happens when the dog catches the car? Does it know how to drive it? You get run over, right? If you don't have a plan for what you're going to do when the wealth happens, we know another bull cycle is coming, right? People that are still here, people that are listening to this, people that have DCA'd during the bear market, you're likely going to come into some wealth. And that could be a lot. Like there's going to be stuff that goes 10, 20, 100, 1,000x in this next go. And even if you you may not think, okay, I got 10 grand in the market, whatever, I got $5,000 in the market, or I got $100 in the market. I know a guy that put $100 in Doge that walked away with like $500,000. Okay. So like, yeah, a little can go a long way if it's in the right spot. But like, why did you make that investment? What are you going to do with the money? And that'll kind of dictate whether you let it ride, how you're able to leverage the crypto that you have. So my definition for financially free is you make twice your expenses every single month from passive income. So you don't have to be a millionaire. Most people don't even have to be a millionaire to be financially free. Okay. You got your money somewhere. Let's say
that's the idea of retirement.
Right. Well, but if you have your money in an asset or something else that produces cash flow for you passively every single month, you get a check in the mail. But let's say your bills every month are $5,000. You live a modest lifestyle. You drive, a normal car, and you have food and living expenses, whatever. And maybe you're in middle America. If you're on either coast, it's probably more than that. But let's say it's $5,000 a month, and you make that $500,000. Okay, you got lucky, you put it somewhere, you get your $500,000, you cash out. Taxes are always a consideration, right? So you have to be leery of that. But past that, where are you going to place that money that it gives you twice your income? And then you're free, right? Because now you don't have to work your day job if you don't want to. Hopefully you do something that you enjoy and you get fulfillment from. But if you don't, now you've replaced that income, you've got extra every single month, and now you can try to figure out what that is for you. That's my hope for I think that they're introducing UBI in Canada. I think that that'll do that for a lot of people there and wherever else they introduce that. And you can have your opinions about it. I think that the way that they're going to be able to accomplish it actually makes sense, which I've talked about a few other times. But if you have passive income, imagine not having to worry about eating or sheltering yourself or water or basic needs, all that's covered. And now you can figure out what's actually fulfilling for you, what type of work you want to do, and then go do that. And maybe that's just painting, maybe whatever it is, right? But you have the options now where you didn't before. And so that's what I kind of think is should be everybody's short-term goal. Not to impose goals on other people, but if you could create passive income or invest your money somewhere that you got twice your bills every month in passive income, then now you're technically free, you're financially free, and you can choose to pursue other things. So what does that look like and how could you accomplish it? That's probably what you're asking at the root of the question. And you talked about, real estate properties. Some people do it through that vertical. Other people do it through annuities or funds that they put their money into that pay them on a regular basis because they allocate the capital, they make an excess, and then they pay their investors a certain interest rate. Either or, right? It depends on how passive you want to be and who you trust with your money and your interests. If you're proficient with, if you want to get into real estate, or if you want to get into private equity, or you want to get into M&A transactions with businesses, all those are options when you have the capital to do so. So again, it's difficult to give anybody specific answers, or, again, like you said before, not financial advice. Always consult with your financial advisor before making any investment decision. This is only for educational entertainment purposes only. but yeah, what's the follow-up question, or how much does that kind of answer anything?
Yeah.
I know I just rambled on a whole bunch.
I think it was great actually. I think definitely hammering in, especially I think the thing I sort of like the most is hammering in on just the idea of if you're going to do anything with any amount of wealth that you're able to attain, make sure that you can use it to potentially continuously generate wealth. And sort of the idea of sort of defining that idea of financially free being, what are your current, expenses and all that, and double that and see if you can find passive income that can acquire that. And I think that's a very good framework to operate on in terms of, because the reason I say this, and the biggest reason I say this, is everyone under the sun wants to, it's almost like the when moon question. Oh, the Lambos and the this and the that and all that. And it's just like, okay, cool. Okay, you don't want to go off into that territory, but at the same time, you don't want to go off into, actual like, oh, do this with your finances and that. So you're stuck in this weird gray zone. That's why I liked how you painted it from an abstract of find something that can allow you to, like I said, and it's all judged on people on their own individual stance. So if you happen to be living in this way, well, if you can find a way to continuously live that way and take any amount of capital you have to continuously generate revenue and maintain that lifestyle, find that. And everyone has their own competency. So like you said, if you know a little thing or two about real estate, maybe that's it. If you know a little thing or two about private equity, whatever it is. But I think sort of having a realistic idea on what to do in that regards. And I only say this because everyone was losing their minds about like yesterday and the prices and stuff. And there was a bunch of stuff. And I'm like, okay, this is all cutesy and all. And all the when moon and the Lambo stuff comes out. But even to myself, I'm thinking to myself, I'm like, what would I actually do? What would I do? And I actually haven't been through a true bull market. I've been through like the last bull market, but sort of like I like first blew up right in the middle of that. So I didn't get a chance to go through like the bear market, the turmoil, everyone sort of feeling this way. And I've sort of seen it now, and I see people bubbling up and getting super excited. And even and I say this now too, because I knew plenty of people in the last bull market, right in the middle of that were like, oh, my portfolio went to this. Oh my God, And you're sitting there like, what? So sort of just sitting there going like, oh my gosh, like what could a regular person who's sort of in this how could you have a realistic perspective on what to do if you even come to any, and that's thing, like you said, whether it's $100, a couple $1,000s, whatever means a substantial amount of wealth to you, in terms of the growth of whatever amount of capital you had. I think the thing is just having a realistic understanding of what to do. That's thing. I say that now. I bring this up now because everyone's gonna lose their mind when everything loses. When you're in it, no one cares. No one cares to have this conversation when you're in it. Everything's just, oh my God. Oh. Like, so I bring this up now, and I try to like tiptoe a little bit. But I bring this up now because it's something to bring up before things get too out of hand. Because when the euphoria hits and everyone's all excited, and oh my God, it's hard to bring them up then. And yeah, so I wanted to sort of at least get that out of the way before we saw whether it's a bull market or whether it's a hype cycle or whether people are just getting giddy about, it doesn't really matter. I just saw that the past few days, and it just had me thinking. I remember the last cycle and things were crazy and things look like they're bubbling up and people are getting really excited here. But just what's a realistic outlook to have when dealing with these, in terms of just managing any amount of capital that you may just attain from being not even just in the space, but in general. Like it's almost like lottery advice. Like, what would you do if you won okay, well, there you go. If you won the lottery, maybe you should find something that like, yeah, exactly. Like, or, maybe you came into an inheritance, or maybe you, doesn't really matter, but it's just that same framework still works,
Yeah, it's like 75% of lottery winners go bankrupt within 3 to 5 years. And it's sudden wealth syndrome. If you've never had wealth before and you have people coming out of the woodwork asking you for things and you win Lambo, and you buy all these cars and the house and everything else, the money runs out. If you don't put it somewhere to continue to make you money, so you can pull money off the money tree, if you don't plant seeds with your money, my parents told me the money didn't grow on trees growing up. They were wrong. They can print as much as they want. But aside from that, you if you take the money and you put it somewhere that's going to continue to feed you, and I talked about this at XRP Vegas and a few other conferences. Even if you wanted to keep it in the same vertical, right? Like I've talked about, pay your car payment because you own a car wash. Okay. Maybe you pay your house payment with the multifamily property that you own. Okay. And that's going to take longer for you to get the cool stuff that you want. But that discipline that you have on the front end of purchasing an asset that's going to continue to pay you in perpetuity and make the payment on whatever you want, regardless of if you continue to want that item or not, it's going to set you up. And you want to partner with the right people. You want to find people that have the expertise in that vertical. A lot of time, the money guy gets 60 or 70% of the deal, and somebody that sources it and actually manages it gets 30 to 40% of the deal. So the money guy gets the lion's share, and he's completely passive. He just comes with capital on things. We have partnerships where we do M&A transactions. We come in for the down payment on the SBA loans. It pays 15% cash on cash. And then after they do the roll up, you get a 3 to 5. Well, it's not a 3 to 5. It's a 2 to 3x on your money at the end of it after 3 to 5 years. Like stuff like that. Find things where you can continually get cash flow from whatever your original investment was. And maybe they pay you out big at the end, or maybe it just continues to pay you over your lifetime. Buying boring businesses, like there's going to be 10 million boomers that retire over the next couple years. And a lot of those own businesses that are profitable. And if they can't sell them, they will shut them down. And they have people in place that are running those businesses for them. You might have to do a little bit of work and hire some people, but like if you can work those deals, and a lot of them will owner finance, you can get a lot of creative stuff done. You can get an SBA loan. Maybe you just got to come with a little bit of capital down. But all these things require work too, right? So they're not completely passive. If you want to do completely passive, you're gonna have to be okay with a little bit less return. Like I said, you're not going to get that full 100%. You might get more risk, 60 to 70%. Yeah. So anyway, that's kind of the frame of reference I look at. I'm trying to buy assets with my profits that spit off cash flow that pay for my lifestyle, like you mentioned before. So if it's, like I said, the multifamily property, maybe you got, let's say you make a couple $1 million. Okay. And that's what you take as profit. And you put that down on a multifamily property, you leverage it 75%. So you're putting 25% down. It's an $8 million property. It should cash flow around $800,000 a year. After you service it, you might be left with a couple $100,000 a year in your pocket off that property, even if you had somebody else manage it for you. And that's going to be able to pay your house note, right? Like you could have a really nice house for a couple $100,000 a year. You could probably have your house and your vehicles and everything else off of one multifamily property. And over the next 5-10 years, as it's paid off, now you don't even have to service the debt anymore. And when you sell it, you can 1031 it into another property and defer those taxes. So that's why so many people like most millionaires are made in real estate. Most billionaires are made in business and private equity. So the longer you're willing to defer the Win Lambo, even after Moon, the better off you'll probably be.
I love that. I love that. The longer you're willing to defer the Lambo, even after Moon, the better off. I love that. I love that. Yeah, I bring that up just because I've been in the space a bit, and I've seen the ups and the downs, and every so often, like I think to myself, I'm like, oh man, like, what if, I guess. And obviously, like it's just like that's sort of like the general era in the space. But then the more you sort of see people like jumping around, excitement and stuff, part of you goes, okay, well, what if you were to, what if you were to? Let's have a realistic idea, because I see so much of the One Moon Lambo stuff, and we see it in the public too. You see like every influencer out there like do the whole like Lambo, Gucci, like got the freaking it's like a culture at this point in crypto. So it's not just that people are sort of like contemplating it themselves; they see it everywhere. And don't get me wrong, a lot of these people do it as a part of their brand, so they may not even have the money to do it. They're just trying to, inflate their brand.
Well, they're right too.
That too, yes.
The influencer can buy the Lambo, and if they're using it for marketing and in their videos, they can expense that. And that's what maybe the average person doesn't realize. Tax. I like taxes. I know that people are gonna hate me for that, but and I don't like them because I want to pay the IRS. It's a big game, right? And there's these rules to the game. And as long as you know the rules, you can play the game, just like other wealthy people. The problem is if you just come out of the chute and you take all this profit, and then that's the other deal with lottery winners. I didn't even realize this. So I talk about the gift tax threshold in the U.S., which is $12.92 million per person. So let's say you want to move that into a trust. You can gift up to that amount into the trust, and anything above that, you're going to have to pay 40% tax on.
Dang.
So, like lottery winners, if they want to protect that wealth, they're going to get whacked with the income because they played the lottery as an individual. They didn't buy it under an LLC. Okay.
Which is like if you're like doing that under an LLC, like, would you really be playing the lottery? Well, I mean, maybe they do it and they like get him like in bulk or whatever, and they're playing like this statistic game of like, well, maybe we could.
Yeah. But anyway, so you get whacked with the taxes there. So it's income tax. You're gonna be taxed at 37.5% on whatever your lottery winnings are. And then when you go to move it into a trust to protect everything, you're gonna get whacked again with another 40%. And so I'm telling people to maybe get this stuff under an LLC or get it in a trust before price appreciation happens. There's a point behind that. You're protecting yourself in a lot of different ways.
That's quite brilliant, actually. I've never thought of that. That is quite brilliant. Yeah, because at the current date, whatever valuation of the asset would be under whatever rules of that asset. So if you had to pay the taxes, better pay them now than later. And yeah.
Yeah, if you think things are going to appreciate substantially over your lifetime, it would be better to get it in a trust or inside of an LLC now. And just so people know, this is what I spend my time on, is preparing and creating solutions for the people that don't do this. I can shout from the rooftops that this is a good idea. Some people will do it. Most people won't listen. And then, they're going to have a liquidity event. They've got 10, 20, 50, $100 million. And then they're going to be like, well, how do we not pay taxes? Okay, here's my suite of solutions that we've come up with to mitigate your tax implications, because there's not going to be a way to not pay taxes. We have different solutions. So I'll just walk through a couple here since we have a little time. Insurance is a great way to do it. If you do have a business, if your stuff is inside of a business, you can take out key employee insurance on your key employee, which would be you, the manager of the business. And you can expense that and write it off. And then you can draw lines of credit against it. Debt is not taxed as income, so any loans against your assets are not taxable. You can pay that out. Another way you could do it is in the U.S., Section 179 of the tax code is for heavy equipment. Anything over 6,000 pounds that you purchase for your LLC is considered heavy equipment, and you can accelerate depreciation in the first year 80%. So even if you finance it, you can pull forward that depreciation. So let's say, cash out $5 million, you put $2 million down on a jet, and the jet's worth $8 million. we can write off $6 million this year against your $5 million that you took out, and you get to keep the rest of the $3 million, pay no taxes, and you still got the jet.
See, that's interesting. Can you actually go into because that's the one thing that I find really interesting about taxes is being able, especially through an LLC, the depreciation element and certain things that have, because certain things, I know people do this on property, like big property, like all the time, just because, you know, like it's really illiquid and it's not like anything's going to happen. So like write off the depreciation for a property that you really weren't going to sell. But can you explain just depreciation, how people can capitalize off that? Just, I know it's a little bit of an abstract concept, but I think it's something that people only see like big, like the big corporations doing. But it's one of those things where they could probably even take advantage of it themselves. Even if they let's say that you were a small business and you did have like an LLC, but it was for a smaller business and you did want to take advantage of some of these. I feel like a lot of these strategies could be, you know, whether you're like a mom and pop shop who just happen to, you know, be interested in crypto and now have a little bit of, you know, I feel like these are strategies that the average everyday person, you know, not some big corporate exec can take advantage of. But yeah, I just wanted to see if you could elaborate or explain the depreciation element. Yeah.
So a lot of people that I work with, like I just bought a truck this year. I'll write off 80% of that purchase, even though I financed it. Right. And so I'm able to write off taxes that I didn't have to spend money for. What depreciation is, normally you would have, like on a property, it's over 27 and a half years. So they basically take the full value of your property, and over the 27 and a half years, you get to write off the little bit that is the total value of the property divided by that time frame. Okay. Now, if you accelerate that depreciation, you're pulling all that write-off forward into this year. And this helps businesses scale, right? Because then they get to keep more capital in their pocket. They can redeploy that capital into the market or their marketing, their sales, whatever else to generate more GDP here in the U.S. So it's of benefit in capital markets. But that's really the premise, right? So let's say you bought a vehicle. We know that even after 10 years, your vehicle's probably going to be worth something. But in the eyes of the IRS, it's not. They're going to amortize your vehicle over 10 years. So let's say you bought a $100,000 vehicle. If you just amortized it over the term that they give you, you're going to get $10,000 worth of write-off each year. Because technically the vehicle's worth $10,000 less, right? Probably not, but I'm just saying that's how they work it. So you're able to pull 80% of that forward into this year, and that's basically the premise of depreciation. Is there's future loss that you're going to have that you're going to get to take into account this year. Up until 2022, you could write off 100% of anything that was over 6,000 pounds. So you see these soccer moms driving around in like the high-end Porsches and Lambo SUVs.
Yeah.
G-Wagons.
Yeah,
right?
G-Wagons.
That's because they bought that for the business and they financed that $200,000 vehicle and they put $40,000 down and they were able to write off $200,000 that year. So they got to keep $160,000 in their pocket. Well, I guess whatever the 40% would have been. So, you know, an extra $40,000 in their pocket. And what does that $40,000 do? It probably makes the payments on that vehicle for the next 2 years before you trade it in. Probably pays for the gas on the vehicle. It probably pays for the maintenance in that vehicle, right? So you can get a free vehicle. You still had to put the money down on it, but what you saved on taxes makes the payments and stuff for the next 2 years. So that's basically the premise behind it. And you'll see people that come into a lot of money do this with jets. What you mentioned on the properties. So normally, again, it's over a 27 and a half year period, but you can pull things forward with a cost segregation analysis on a property. So what they do there is you'll pay for that. Somebody comes in and they say that, you know, your HVAC system, you could depreciate that over 5 years. The windows are going to be 7 years. The floors are going to be 5 years. They break down the property into all the pieces and components that build up the property. And then you're able to take things significantly faster. but like we have a property under contract in Midland right now, and when we close on that, it's a $13 million property, and we'll get like $1.7 million in cost seg this year for the investor. It brings the $5 million for that. So you don't get to write off all of it with multifamily property, but he'll get 1.7 again next year, and the year after that, and the year after that. So it's a 5-year cost seg instead of the normal, like, well, I guess it's like 5 to 7 years worth of cost seg instead of 27 and a half.
Wow. So it's like offsetting your liability with that depreciation, and they just have that either factored in each year or sort of doing it up front to scale up the growth of, you know, what other organization. Because I know that was like a famous thing that Amazon was like known for, like deferring their taxes forever. And then when they finally made like a ton of money, they were just like, yeah, so you know, we haven't made money for like 17 years now. Is it possible? Like, and people were like sort of annoyed by that, but it's like, well, when you start looking into it, it's like, yeah, you know, there was a time where they weren't profitable, and it's time they'd use that for growth, and what can they do with that? And different assets have appreciated over that time, so what can they do with that? And, you know, people talk about different organizations doing that in different regards, but yeah, just sort of like you said, even just riding off like a truck, or like I see the G-Wagon, that's like a meme too. Get the business G-Wagon and ride it off.
Well, you know, I've worked for wealthy people before I do what I do now, and that's what they would do. They would buy something that was over 6,000 pounds, and they'd trade it in every 2 years.
Every 2 years.
They would, you know, use. So right now you would get 80% this year and 20% next year, and then you would have depreciated the vehicle completely. Whatever you traded it in for, you would get as income because you've already written that off. But when you rolled it, you know, whatever you financed, you'd probably be able to write off the income that you just made off the vehicle. So anyway, that's all the fun stuff that my CPAs and accountants and like, I know enough to be dangerous. I'm not a financial advisor. But I kind of keep people in their lane and keep them straight, the advisors that I work with, so they don't take care, or that they don't take advantage of anybody, right? I don't fee share with my advisors, which people find weird. But I do that so that I can make sure I keep my client's best interest at heart, right? If I was incentivized monetarily by, you know, a client, you know, getting a certain product or doing something that the investment advisor or the estate planner or somebody else was stating that they need to do, it's going to be in the back of my mind that I'm going to make a bunch of money on this, and I might make a slip in judgment and do what's not best for the client. I don't even want to have that as a thought. So that's why I just don't fee share, and I just want to provide the best professionals that people can work with.
That's awesome. That's awesome. Yeah, I know. I love it. I love it. I wanted to say one last thing. Well, I guess two last things. One, so I added you to these founders chat. Everyone that I speak to in the space, I add them to this Founder Society Discord. I have two. I have my normal community channel Discord, but then I have like this Founders Discord. And there are people in this Discord that are part of a bunch of different projects. You probably already know a few of them that are in here, but they all have a bunch of different projects, usually used for collaborations, connections. Yeah, usually whenever we go meet up in person, this is sort of like a group chat to get a chance to collaborate with. But also, since now that you're in the chat, if you ever see me live, whether you saw me on YouTube or on Twitter or whatever, and you want to pop in just to say hey, or if you see me chatting with some other people and it's sort of just chilling, you want to pop in, feel free to pop in at any time. That's sort of why I'm doing this. I know that we've had combos in the past, and sometimes we'll like hop in a call, or sometimes we'll hop in a space, or maybe we'll just catch each other at the right time or something. And I'm trying to do that, but trying to make it more expansive, so I spend less time explaining the conversation I had and spend more time in the conversation, as well as people being able to showcase what they're doing. I know you're probably like one of the coolest ones I've seen in the space that's doing things that are tangential to crypto, but also with crypto. Because, you know, everyone that's all in like DeFi and all that. But it's just like it's like a breath of fresh air being able to speak with you about a lot of different topics. So I was hoping I could be able to capture this and hopefully get you a chance to be able to talk about the things you're interested in too. I hope everyone that's able to come on gets a chance to share the things, because everyone goes, oh, Quincy, you got your stuff. I'm like, hey, but there's a lot of people with a lot of interesting things, and I want them to be able to come on and share that as well. So yeah, if you ever want to come on, you want to talk about more of what you're doing, you want to talk about more of what you're interested in, or more things that you may have seen, just feel free to hop in whenever. And